Hello, all you lovely people out there. How is everyone doing? I'm Kate Hill, and I'm here to give you the best unbiased and honest content on property. So stay tuned for all your latest property news. As I'm sure we all know, the RBA announced another rise in the official interest rate. The RBA board increased the cash rate from 0.85 to 1.35 on the back of a similar increase back in June. Now, many households are sitting on a large savings buffer, which will help to ease the impact of that recent rate rise. For many homeowners, substantial home equity has been accumulated after the significant rise in home prices over the last 2 years in most areas. And some have taken advantage of falling interest rates to pay down their debt quicker. Mortgage Choice National Sales Director says that most lenders have already substantially increased rates on variable and fixed home loans. More rate rises are likely. Now, just to redress the balance a bit here, give everyone some perspective, we are still not back to the very low rate that we were at in 2019 before COVID. They are bringing us back in line with their overall monetary policy. Now, of course, many people have not come across an actual interest rate rise in their adult or, let's say, property buying life, so it may seem a bit overwhelming. We haven't had anything like this for 12 years. But if you look at this chart here of mortgage rate rises, you'll see what was happening to mortgage rates between 2000 and 2011. And I do want to point out, did property prices come crashing down? No, they did not. Look at this here. They are going up and up and up. Rents are continuing to rise as vacancy rates drop, with new figures showing the national rental crisis has become even more severe. Obviously something I've been saying for months and months and months. CoreLogic's quarterly rental review for the second quarter of 22 shows dwelling rents are up 9% in capital cities, 11% up in regional areas compared with June a year ago. SQM Research has even higher figures, with rents up 15% in the past year as an overall average. The national average vacancy rate has fallen to a record low of 1%, back down from 2.2% this time last year. The report shows that June's rental listings are 34% below the long-term average. That's a lot fewer rental properties. Now, Darwin is the only capital city to record rent growth below 2%, while Adelaide had the highest growth during the quarter of 4.3%. This is not surprising because Adelaide has had the lowest vacancy rate of all the capital cities. We believe that rental markets will remain tight for some time for a number of reasons, including lack of supply, a reduction in investors, and that continued and growing demand. See some of my previous videos about exactly that. Now, rising interest rates have not been enough to deter home buyers. Australian Bureau of Statistics lending figures show that the value of new housing loan and investment loan commitments rose during May, which is their latest release. The value of new owner-occupier loans increased 2.1%, investment loan commitments rose 0.9%. The Real Estate Institute of Australia says that the number of new loan commitments to first home buyers grew by 2.3% in May, but was 31% lower than the same time last year when the stimulus packages were in place. Now, these figures show that first home buyers are keen to lock in mortgages as interest rate hikes loom. According to CoreLogic, the home sales are still 16% lower than they were a year ago in terms of numbers, right? National advertised stock levels are about 7% lower than in 21 in Sydney and Melbourne. In Adelaide, advertised stock levels are 17% lower than last year and almost 40% below the 5-year average. The number of mortgage holders refinancing has surged following recent interest rate rises. Refinancing of existing loans has increased 17% in the past few weeks, while all lenders are reporting very strong levels of inquiries about refinancing. Borrowers are being encouraged to review their interest rates annually, at least, to ensure that they get the best deal going. Experts are advising that the first step any mortgage holder should take is to contact their existing bank, speak to the retention team, advising the retention team that you want to refinance your loan with another lender, but want to give them the opportunity to give you a better rate, is often an effective way to secure a better deal without having to change lenders. Depending on your type and value of loan, most lenders will offer some level of discount to keep a customer. If you're not sure about any of this, then do talk to an independent mortgage broker. Now, we will keep you posted on all things property from around Australia as our year progresses. Don't forget to hit that like and subscribe button if you are enjoying all the free content, and I will see you again really soon. Bye.